Hello and welcome to the IMF annual meetings in Washington, DC. I'm here with European Investment Bank President Werner Hoyer. Thank you very much for joining me.
Pleasure, thank you.
Thinking about the economic indicators we're seeing in Europe, it seems like the economy is much more resilient than it's been in a long time. And this month we expect to hear from the European Central Bank on how it is going to unwind QE. Do you think that Europe has turned a corner economically? And what are the big risks on the horizon that could deter that?
Yes, I believe that, and this is quite refreshing after years of IMF meetings here in Washington where Europe always was cornered as the sick man. This is not the case anymore. Europe has gotten around the corner quite well. Growth rates are there, but I think they're not sufficient. I mean, there is no reason for complacency, but we are definitely on the right track. And that should not lead us into complacency because there are risks around the corner. External shocks like the one we had last year with Brexit and the difficulties in the transatlantic relations, and also in the immediate environment, Turkey, Brexit again, and Russia. All these are disturbing factors, but maybe the most important disturbing factor could be complacency about the economic situation in Europe now, because we still have to be aware that this just gives us the opportunity to address the structural problems we have in Europe. And I think this awareness still needs to be heightened a little bit.
That leads into my next question then. So last month we heard a rather optimistic State of the Union address from European Commission President Juncker. And just this week the European Commission has announced that it would like to complete the banking union by the end of next year. How confident are you about a more integrated EU going forward, and how important is this?
Well, I'm very encouraged by this indication that it might be done by the end of next year. We need that urgently. And we have made considerable progress over the last 6 years to clean up the markets and the political structures that have led us into trouble before. So that's the good news. But we have a bigger picture to address, and that is the future of European integration, which obviously is a little bit disconnected from our people who are lacking the leadership that they need in order to believe that this is the right way. I believe we have to further integrate, in particular where markets count and where the European nations, in too many cases, are still affording national legislation, national regulation in areas where our main competitors in the world are commanding huge markets, united markets of more than 1 billion people. So in this respect, we need more integration. On the other hand, the art of European integration is always the balancing act between subsidiarity and solidarity. Some people sometimes miss solidarity, and others sometimes overlook the necessity to talk about subsidiarity. And this then leads to also the balancing of powers between the community sphere, i.e. the Commission, and the intergovernmental sphere, i.e. the national governments. This is a real difficult challenge to be met.
I wanted to ask you about sustainability, which I realise is a big focus of the bank, and also you're a pioneer in this area, having played a pivotal role in terms of launching the green bond market. Do you think that sustainability can become mainstream within finance? Do you think it can become a criteria that is taken into account in most financing decisions?
I believe that is unavoidable. So far, many people have been thinking in the political realm that this is a luxury thinking. I think it would be irresponsible not to take sustainability more into the core of our decision-making process in the next years and decades. And we have learned it the hard way. We now must deliver on more sustainability awareness.
We still have a global infrastructure gap of around $1 trillion annually. And I know the EIB does a lot of work in this area, obviously. How important is narrowing the gap to achieving sustainable and inclusive growth? And who do you think needs to be doing more to help achieve that?
Obviously, this is imperative. And that means, on the other hand, that however you want to increase public budgets in the next years, however you want to increase scarce resources in order to address these gaps, you will never get there without a better attraction of private funds from capital markets into the mastering of these challenges. And that means we need to develop a better understanding of crowding in the different ways The EU bank has always been a crowding-in bank, both by financing itself, because we are not budget financed, we are financed by the $70 to $100 billion we borrow on the international capital markets every year. And in addition to that, we survive by guaranteeing excellence in the projects we finance, which then, after we have given approval stamp to a project, attracts others. This is the second way of crowding in private money. And we must address this principle more also in the development policy fields and others where the infrastructure gap is the worst.
President Hoyer, thank you very much for your time.
Thank you very much.